5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A monster rally in shares of Intel after the chipmaker posted an outlook well above the street's expectations. That, along with TSMC boosting its forecast, seems this morning ahead of an even bigger tech earnings week. Oil also gaining with no sign of peace talks on the horizon between the US and Iran. And we can have a look at oil right now, up to 106 and change on Brent, 97 practically on WTI today. So oil really gaining. Now, it's interesting because this is a slightly different war on trade than we have been seeing. Today, we also have equity index futures higher. This, of course, thanks to Intel results and some of the enthusiasm that's come from the AI trade once again. Don't forget the SOX index up 33% this month alone, so that has been a massive rally. Let's take a look at some other asset classes. Yields today are not moving a whole lot, but we are seeing the 10-year yield still at that elevated level. The dollar index unchanged and gold below $4,700 an ounce. So there's not a lot of conviction out there, low volume, low breath when it comes to the gainers in the S&P 500. At the same time, oil is rising. So what does that portend? We'll see. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Vonnie. There's a huge move for Intel this morning after the second quarter forecast came in well ahead of expectations, thanks to, of course, very strong AI demand. And so for investors, this will be seen as evidence that the turnaround is working and that the huge rally in the shares recently is justified. And so we are up more than 23% for Intel this morning. Moving on to TSMC, which is also having a good day today after the financial regulator in Taiwan eased some limits on single stock fund holdings. And so this is something that could unlock billions of inflows for TSMC, and therefore we are up also for that company. And finally, to round up our very tech-heavy morning, we have got SAP also moving higher after beating analyst estimates. And so those results were seen as reassuring, easing fears around both the AI disruption and also the impact of the war in Iran on business confidence. And so this is seen as a welcome relief, especially after the quite disappointing results that we had from ServiceNow just yesterday. And so we are up about 6% for SAP today in Germany.
Chloe, thank you so much. That's Chloe Melly there in London. And coming up this hour, we're going to be speaking with Sonja Marten of DZ Bank as investors see renewed appeal in the carry trade. But first, Washington and Tehran still at a diplomatic standstill as the Strait of Hormuz remains shut. Let's discuss the state of play with Jumana Bercetchi in Dubai and Laura Davison in Singapore. Jumana, bring us up to speed. We haven't heard much from the Iranians and there's not much happening in the Strait of Hormuz right now. Is that roughly where we're at?
That's exactly it. You could call it wait and see. You could call it a stalemate as we await to see what the next steps are going to be. And it's also a bit of a chicken and egg situation because President Trump yesterday was saying that there's no definitive timeline and that he's not going to lift the U.S. naval blockade until Iran make a deal. Iran, for their part, are saying that they're not going to return back to the negotiating table unless the U.S. lift that naval blockade. So it is a bit of a battle of the wills, so to speak, around the Strait of Hormuz. And for all intents and purposes, it's still effectively shut, especially for commercial vessels. We've been tracking a few Iranian sanctioned vessels that have been trying to make it through. U.S. Central Command say that they have managed to turn around 33 vessels in total since the blockade went into place. But then also the last 24 hours, we've seen multiple attempts out of Iran to defy that blockade. And President Trump also saying that he's directed the U.S. Navy to fire at any Iranian boats that try to lay down mines around the Strait of Hormuz. So it is still ultimately very risky. There are very little flows, very little traffic going through. And not just for Iran and U.S. here, but this is a stalemate that is going to have global repercussions. And I think the question that people are really asking is, number one, who blinks first? Or number two, to get out of this stalemate, is it going to necessarily require return to hostilities? And indeed, President Trump has said multiple times over the last couple of days that the military is locked and loaded and ready to go. Iran, for their part, are also saying that they are ready to return to the battlefield. So it could go either direction from this point.
Just one thing, do we know who even is responsible for negotiations in Iran right now, Jumana?
Well, I mean, this is the big question, and I'm sure Laura will speak to some of the reporting that we put out overnight. You know, a lot of the social media messaging that President Trump has put out the last couple of days has really not gone down well with Iranian officials. And if you remember, the day that he announced the extension of the ceasefire, he also referred to fragmented and fractured Iranian leadership. And what's interesting, what's coming through from the Iranian side is multiple comments from these senior officials suggesting that actually they are a cohesive unit and that they're working in conjunction with each other. That this contradicts a lot of the reporting that has come through, suggesting that on one hand, you do have the pragmatists, you have the likes of Ghalibaf, you have the president who want to push forward with the negotiations because they fear that the longer this goes on for, the more it's going to harm the Iranian economy. At the same time, the hardliners, the IRGC, the clerics, are thinking that they can stare the U.S. down on this one, and that as long as the U.S. blockade stays in place, they can continue to fight back, to wreak havoc, to seize vessels, to cause disruption in the region without a lot of significant outlays. And from their perspective, you know, just coming out to the other side of this, having survived, is a sufficient enough outcome for them. So again, questions internally about which one of those groups is going to prevail.
Laura, Jumana mentioned that we might even need a return to hostilities in order to break this stalemate. Let's have a listen to something that President Trump said in response to a reporter question.
How long are you willing to wait until you get a unified response?
Don't rush me, Jeff. You know, guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for all the, I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
I mean, that suggests that the president doesn't have any, at least public, sort of interest in ending this war anytime soon. But do we know that to be true, Laura? I mean, gas prices bottomed at 402, but they're on the rise again now.
Yeah, this is just one of the many examples we've seen from the president in the past 2 months or so of really mixed messaging. If he's, you know, over the past week vacillated if he wants to make a deal, he sees a deal coming together quite quickly. Now he's saying, you know, don't rush me. This could take some time. And this has been part of the problem as he's been dealing with the Iranians. As Jumana mentioned, there's a great story on the terminal that talks about how the threats and the social media posting he's been doing has actually been quite detrimental to the talks and contributed to there not being talks last weekend in Pakistan between J.D. Vance and the Iranians. You know, some of these maximalist threats, he'll come out and, you know, say things that he's going to, you know, bomb Iran back to the Stone Ages, setting some of these deadlines and then pulling back from at the last minute, almost seemingly day by day, that depending on the president's mood and depending on where he sees the leverages, he'll fire off a new sort of edict from social media. Has really, you know, a strategy that may have worked when he was dealing with universities, with corporate America, is not working well when dealing with the Iranians, partially because they have leverage, and that is still control over the Strait of Hormuz. You know, Trump has tried to you know, counter that by putting in his own U.S. naval blockade. But he's found himself in a situation where he does not have full control, which has been unusual for him. And this is really kind of where we see him, you know, grappling with the loss of public support for the war. You know, the fact that the economy is going to struggle from this. Republicans, as they face the midterms, this is going to be a key issue for voters. And so this is all, you know, really contributed to the president sort of really struggling on how to move forward here.
There was some suggestion that Pakistan was putting out this proposal that perhaps there would be some unfreezing of sanctioned money or what have you in order for Iran to maybe ease up a little bit on its Strait of Hormuz conditions. Is that gaining any traction, Laura?
This is one that it's, you know, kind of a middle ground proposal, but we still have both the U.S. and Iran sort of saying that they're not going to talk unless, you know, sort of this blockade issue has been resolved. The U.S. saying that they will not come to the table, you know, until the Strait of Hormuz is open, and the Iranians have said that they will not come to the table until the U.S. blockade is over. So, you know, we really are waiting to see, you know, who is going to crack first on either side. You know, are there some concessions? Are there some proposals like this one from the Pakistan officials that might be able to help bridge some of these divides. But one of the things, especially when dealing with Donald Trump, is you have to give him some sort of face-saving measure to be able to agree to something. He wants to be able to tout a big number, a headline win. Right now, there hasn't been some sort of arrangement here that has been able to work, that has also been appealing to the Iranians.
Laura, thank you so much. That is Laura Davison there, and of course, Jumana Bersechi in Dubai as well. Staying in Washington, the White House taking a closer look at Spirit Airlines.
I'd love to be able to save an airline. I like having a lot of airlines, so it's competitive. So we are looking at Spirit. It's in a bankruptcy. It's in bankruptcy court, and we're looking if we could get it for the right price. I'd do it to save the jobs, and we have somebody that wants to run it, do a good job, smart person. And if they run it properly and if prices come down, all of a sudden it's a valuable asset.
Bloomberg's Benedict Kamel runs our aviation coverage. Benny, of all the ailing companies in the United States, why Spirit Airlines?
Well, Trump loves airlines. That's number one. He's always been a bit of an aviation nut. So, but there's also the jobs, as we just heard. He's interested in saving those. 14,000 jobs, he said, are at stake here. The question really is, can the government really save an airline that has been on the ropes for a long time? A lot of people that comment on Spirit will tell you, yes, the latest crisis with fuel and with costs has sort of accentuated the crisis they're in, but this is something that predates this latest crisis. This is an airline whose business model has been shaky for a long time. They have been in bankruptcy. They tried to merge with others. That didn't work, or it was blocked. So what can the government realistically do? Arguably buy them some time, prop them up, and then hope that they can get through this, and that maybe even, we just heard it from Trump, sell them at a profit. But there's a lot of ifs and buts involved here. He might be looking at what he did with Intel, which suddenly looks like a very good investment if you look at the stock price increase. But certainly the same can't be said with certainty of the Spirit. As I said, that's an asset that some people will say has been sort of a zombie airline for a long time. And some airlines, people will tell you, should just be let go and left to die. Trump seems to think differently, and we hear that they are working on some sort of a package whereby ultimately the taxpayer would own the majority of this carrier.
Benny, would Spirit be a state airline if this were to happen? I mean, we've seen that in Europe quite often, but we've never seen anything like that in the United States. And how would it work for other creditors, Ares and Citadel and other people that have put money into Spirit?
So that's a good question. How would it actually work? We don't know that much about the mechanics. Citadel is an interesting one. They've put money into this. Sort of what would happen to the leasing contracts. There's a lot of unknowns in this, but the talks have certainly gained traction over the last couple of weeks. This is what we're hearing. We're hearing that Howard Lutnick, the Commerce Secretary, is driving this. There seems to be some internal debate in the administration whether this is in fact a good idea. Sean Duffy, who's the Transport Secretary, seems to be a little bit more sort of on the side of those who are urging caution. But then there are those who think this should happen. And there's, as you said, sort of the financial side. There are big investors who don't want to lose money here. The state has stepped in the past and propped up airlines, notably during COVID. But this is not a COVID moment at this stage. And again, a lot of people in the industry will say this is probably the time to sort of separate the wheat from the chaff, and Spirit should probably be let go. Trump has other views here, so we'll see how this goes.
All right, massive stock price moves there, even though it's in bankruptcy over the last couple of days. Benny, thank you so much. Benedict Kamel. Now to other top stories trending on the terminal this morning. Porsche selling its stake in the venture that owns the Bugatti supercar brand. The stake will be sold to a fund co-founded by a scion of Egypt's billionaire Sawiris family. Porsche holds a 45% stake in Bugatti. Mercedes is assessing possible cybersecurity risks linked to Anthropic's Mythos. It has not suffered a major cyber attack, but sees a potential for disruption. The Mercedes assessment signals concern that threats from AI bots are spreading beyond the financial sector and into the industrial economy. Canadian manufacturing company Cohere is set to buy Aleph Alpha, a startup once considered Germany's national AI champion. The deal includes a $600 million investment from German retailer Schwarz Group. The Financial Times reported Cohere's new valuation will be $20 billion. Coming up, Intel extending double-digit gains and boosting Nasdaq futures. More on that next. This is Bloomberg. Bloomberg Brief, I'm Bonnie Quinn in New York. Tech stocks rallying as earnings reflect positive AI impacts. Intel's a strong AI-fueled outlook sending shares soaring pre-market. Matt Bloxham of Bloomberg Intelligence joins us. Matt, this is quite the turnaround. Is it the fastest turnaround in history?
Yeah, it's certainly a quick one, isn't it? I mean, it's been a long time coming, but it's a pretty quick pace. Obviously, really good revenue for the quarter they reported, and the forward guide as much as 14% ahead of market expectations. And what's going on here is that as AI shifts from the kind of training environment to the kind of actual deployment or the inference environment, we're finding that there's a lot more demand for the type of CPU, the kind of general purpose compute technology that Intel's always been famous for. So it's kind of a bit of an old school revival, if you like, of the technology that they've always been well known for deploying. They're also obviously trying to kind of pivot into being a foundry business too. That's benefiting from that incremental demand from other parts of the business, but there's also signs that they might be getting outside customers, with Elon Musk talking about using Intel for his own chip development plans. So yeah, overall, encouraging signs for the turnaround in the Intel story.
Matt, I just want to ask you a little bit about Meta and Microsoft and these layoffs. So some voluntary retirements and some actual layoffs. Is this much bigger than you would anticipate from companies of this size?
They're certainly big, aren't they? So we're talking about 23,000 jobs in total, 14,000 of them at Meta, 8,000 redundancies, 6,000 empty posts that just won't be filled. That's, the 8,000 is about 10% of their headcount, so it's a big chunk. And obviously they're having to do this to kind of help balance the books with the big investments they're making into AI and showing investors they are being responsible about managing the cost base and protecting margins. I'd say with Microsoft, similar kind of number, maybe kind of the high single-digit % of their US workforce, perhaps a softer approach there, offering kind of voluntary buyouts for staff. But yeah, it's still a big shift. And I think that it's the same theme, that there are big investments going on in Microsoft into AI, and that they need to manage the overall cost base to kind of manage margins and reassure investors that they're thinking about this in a responsible way.
Matt, I have to ask you about the DeepSeek models. 2 new models, well, one, bifurcated, the V4 Flash and the V4 Pro. Are they sending the shockwaves that previous models did into the market, or are people a lot more sanguine now about DeepSeek?
I think that the initial shock's gone, but I think the underlying theme is still very much there. That these models match the kind of the well-known the OpenAI, Anthropic models for performance, but they can be run at significantly lower cost. And obviously, as we move into much broader scale deployment, cost is going to become a much bigger factor for customers deploying AI. Question mark about how wide scale the DeepSeek penetration will get, certainly into the US and Europe, but it is going to put pressure on the likes of OpenAI and Anthropic to think about the intensive compute power needed for their models and how to make them more efficient so that companies can deploy at scale without really squeezing their margins.
Matt, characterize the earnings season for us so far. I mean, we have had some major tech earnings, but there are obviously still some major ones to come next week and beyond. How are we at least moving to a different stage of the AI narrative? And what are companies telling us, basically?
Yeah, I think first and foremost, the AI story is still very much in rude health. We are seeing more of a shift away from this, just big investments by the hyperscalers, almost kind of risk investment, like in building capacity for the future, and that we're now seeing more of the kind of demand come through from enterprise customers to use that. I think the other interesting thing is a lot of companies like Intel and like SAP, who have been seen as kind of legacy providers potentially at risk from this trend, are actually kind of being more resilient, and that's an interesting theme I think for investors to watch.
All right, Matt, fantastic context. That's Matt Bloxham there of Bloomberg Intelligence. Coming up, a look at what's in your front page news headlines. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. And first up on the Washington Post, the Special Forces soldier involved in the capture of Venezuelan President Nicolas Maduro being charged with commodities fraud, wire fraud, and using confidential government information for personal gain. Federal prosecutors say Gannon Ken Van Dyke used his access to classified information to place a series of wagers on Maduro's future through Polymarket, netting him more than $400,000 in profit. Next up, the Financial Times is reporting Poland's prime minister has questioned whether the US would be loyal to its NATO commitment to defend Europe in the event of a Russian attack. Donald Tusk told the FT Russia could attack an alliance member within months. And the Wall Street Journal reporting Oracle's $300 billion AI mega deal with OpenAI pushing debt investors to the limit. The Journal says a funding snag is posing risks to the data center boom. Banks, including JP Morgan, struggling to spread the risks of the loans. Coming up, we're going to be speaking with Sonja Marten of DZ Bank. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A monster rally in shares of Intel after the chipmaker posted an outlook well above the street's expectations. That helping boost tech stocks even higher this morning, and that's before an even bigger tech earnings week next week. Oil also gaining with no sign of peace talks on the horizon between the US and Iran. Let's start with oil then. Up another 2%. Brent crude firmly above $107 a barrel. New York crude approaching that $100 a barrel mark. Now, the interesting thing is that today it's not having so much of an effect on equity index futures. Nasdaq futures pointed to a nice gain after Intel just absolutely knocked it out of the park yesterday with investors. Intel itself up more than 20% in the pre-market. Mightn't see as much enthusiasm in the S&P 500, but nevertheless, we are seeing that war on trade bifurcate just a little bit through this earnings season. If we look at the dollar index, it is pretty much unchanged. Same for yields, and gold down ever so slightly. We're also seeing the VIX holding in above 19. We'll see what happens in the next few hours. Let's get to some individual movers now. Here's Chloe Melly.
Good morning, Bonnie. As you just mentioned, Intel shares are soaring this morning in pre-market, up about 25% after its second quarter forecast came in way ahead of what analysts had expected. And so this will be seen as evidence that the ongoing turnaround at Intel is working and that the huge rally in the shares recently is justified and should therefore be extended. Moving on to another tech company, TSMC is also in the green this morning. That is after the financial regulator in Taiwan eased some limits around the single stock fund holdings. And so some analysts are saying this could unlock billions of dollars of inflows for the company. And therefore, we are up about 3% for that company. And finally, let's end with a final tech stock. And we have SAP over in Germany also moving higher after beating analyst estimates. And so these results have been seen as quite reassuring, easing fears around both AI disruption and the impact of the Iran war on business confidence. And this is seen really as a welcome relief, especially after the disappointing results that we had from ServiceNow just yesterday. And so we're up about 5% in Frankfurt for SAP.
All right, Chloe, thank you so much. That is Chloe Melly. US and Iran still at stalemate. Several US officials telling Bloomberg that President Trump's threats and social media posts are hindering the prospect for Tehran agreeing to more in-person peace talks. Bloomberg government's Jonathan Tamari joins me. Jonathan, do we know if the President of the United States, Donald Trump, has any kind of, an idea of what he's trying to do here? I mean, he wants Iran to come to the table. Iran is obviously signaling that there's no incentive for them to come to the table. And the president just keeps insulting them. Where is that going to get us?
Well, it's unclear. The president obviously throughout this conflict has kind of switched day to day, almost sometimes hour to hour, between saying a deal is close, the war is near over, or saying that he's about to escalate and take the war to a new level. I think the best that we can tell, he has not articulated a public strategy very clearly, but I think the best we can tell is that there's hope within the administration that the blockade the U.S. is putting on the Strait of Hormuz now will bring pressure on Iran, that at some point that they will run out of capacity to even store their oil, and that will force them with the economic pressure, the prospects of their oil wells being damaged, to actually cave before the U.S. does because of the economic pressure that the U.S. is feeling from this whole blockade.
It could be a while before that happens, if it ever does happen, though, Jonathan. So what's the plan meantime? Is the president going to run out of patience at some point and start bombing again?
I think that's the question. I think the president has shown pretty clearly he does not want to go back to armed conflict, does not want to go back to bombing. I mean, he's made multiple threats here and backed off of them at the last minute. So I don't think he wants to do that. But yes, I don't think there's a clear strategy for how to get out of this. This is something people have said from the start, that there's not a clear exit strategy. He's been saying since March 9th, at least, that the war is just about over. Obviously, we're well past a month beyond that date. So it's kind of a staring contest right now. And I don't know that he's going to get what he wants. There's also some reporting from our Bloomberg colleagues that he might ultimately have to accept a nuclear deal that looks similar or even worse than the one that he tore up during his first term in office.
Yeah, it's hard to see where it goes from here. Jonathan, thank you so much. Jonathan Tamari of Bloomberg Government. Sonja Marten is Chief Economist and Head of FX and Monetary Policy at DZ Bank, and she joins us now. Sonja, markets are reacting rather strangely this morning. So we have the equity market side of things, which has been pretty anemic, looking to the AI story and the better earnings. But you still have this oil trade going on. What does it all mean for the US dollar?
Well, I mean, as you said, it's a very confused market right now. And to be honest, a situation that we have been seeing since the beginning of this conflict. I think, markets have been trying to find clear direction in this very, very uncertain time. As you just pointed out, equity markets have been pushing higher. This is an AI story, and I think we have a sense anyway that for the past few weeks, investors have sort of been waiting to go back in. We have generally an environment of high risk aversion in some ways, politically speaking, but when you look at the financial market, it seems that the market is playing a much more benign story. We have seen the dollar under some upward pressure in recent days, but I think the moves have been fairly moderate. So I honestly do not think that you can sort of, find one story to fit all market movements here. Overall, though, I would say my sense is that investors are maybe a little bit over optimistic right now, not just when it comes to how this conflict is going to end, but also regarding the question of what the consequences will be for the global economy.
Yeah, and you're not alone. In fact, Deputy BOE Governor Sarah Breeden saying just in the last few hours that current share prices are not yet consistent with the scale of economic pressures facing markets, and there's a lot of risks out there. What are the major risks for investors in terms of monetary policy? Do we start seeing hikes in June from the BOJ, the BOE, and so on? And what does that do to relative rates globally?
Yes, I mean, definitely monetary policy is going to have to go on a very different path for many central banks than what was expected earlier this year. I mean, that the Bank of Japan hikes rates, not unexpected. We were looking for that anyway. It's very different for the Bank of England or the ECB. Also the Fed, obviously. When you look at the ECB and the Bank of England, they will have to hike rates to respond to this rise in inflation. Both central banks, I think, very sensitive to the risk of inflation expectation losing their grounding. I think this is what they're both really looking at. Economically speaking, one doesn't want to hike rates, but with a view to managing inflation expectations, they will both be hiking interest rates. The Fed, on the other hand, hiking rates, I think not an option right now, but I think they won't be cutting rates. And this is going to put Kevin Warsh, if he ever does get finally confirmed, in a very hot seat with the US president. So I think the independence of the Fed will be coming back to haunt us this year.
And it could be that actually moves the yield curve as opposed to monetary policy even. Sonja, I'm curious, does a Kevin Warsh Fed change how monetary policy is determined substantially?
Well, I think not in this current environment. I think he has experience with monetary policy, which makes him definitely a better candidate than some of the others that had been in the running. We're quite confident that he has going to be a steady hand when it comes to the Fed. But I think the problem is going to be that in this environment he can't really cut rates, and Donald Trump is going to put a lot of pressure on him. And to be fair, in this current environment of massive uncertainty, continuity would be preferred. In a sense, it would be better if Jay Powell stayed, but obviously that's not something that is likely to happen. So I think it will be a real test for the new Fed chair, and it's because he's new, it's going to be so important that he communicates well with the market and makes sure that he really drives home the fact that his actions are independent of what the president wishes.
Sonja, we were seeing renewed appeal in the carry trade for quite some time now. What happens to Latin American currencies, given that the president seems to have turned his gaze from Latin America to other parts of the world? Do they continue to see this carry trade, strengthen their currencies? And what does it mean for their economies?
Well, I mean, I think it's interesting, this return to carry trades, which, again, like high equity market valuations, strikes me as a very risky move in this environment. I think you have to be very nimble on your feet when you're in these trades. And a lot of them, I think, are designed to run a very short term. So it's just another reflection of the fact that the market is still hunting for yield despite massive uncertainty. And of course, emerging markets, some of them are going to be quite hard hit by this current crisis, looking at their supply of oil and gas. This is particularly true when you look at Asia. So I think that, again, the market maybe is somewhat too benign in this environment, and with the prospect of interest rates in developed countries sort of going higher, that's another risk factor. So, I think nimble feet and strong nerves definitely required if you're going to go into these carry trades right now.
Sonja, can you have targets in this environment? You typically would sort of have at least figures in your head, right, when it comes to where you see the dollar in the next few months. What are you doing right now?
Well, I mean, for one, obviously it only makes sense to think in scenarios, right? I mean, since none of us can entirely predict what's going to happen with the Iran war, I think we can't entirely predict Trump. I honestly think Trump can't predict Trump right now. So I think very uncertain, have to think in scenarios, be very quick to adjust. We do have targets, obviously, and basically in two scenarios, where one is worse than the other. When it comes to the dollar, I think in our base scenario, we have a euro-dollar target of 120 in 12 months' time. It's a fairly benign forecast. In an escalation scenario where we look at a global recession, we're probably looking more like at 110. But that's kind of, I think, the only way to do things right now, and to adjust accordingly depending on what comes out of the White House.
All right, Sonja, thank you so much. Always a pleasure. Sonja Marten of DZ Bank. Now to other top stories trending on the terminal this morning. China regulators plan to restrict technology firms, including some of the country's highest profile AI pioneers, from accepting US capital without government approval. The move is part of Beijing's broader response to Meta's acquisition of startup Manus. Moonshot AI, which is considering an initial public offering, and ByteDance were among those that got the guidance from the regulators. SoftBank's mobile unit plans to transform part of its factory in Osaka into one of Japan's biggest production lines for large-scale batteries. The move is part of an ambitious attempt at powering its own AI data centers. SoftBank aims to bring the production online within the next 5 years. A Citadel real estate project in New York City is at risk after an attack from New York City Mayor Zoran Mamdani of Ken Griffin's purchase of a $238 million apartment around Central Park. Citadel called Mayor Zoran Mamdani, quote, shameful, after he specifically referenced Griffin's apartment in a video about his tax on second homes. Coming up, Intel soaring after earnings and giving a boost to tech shares. We'll talk Intel next. This is Bloomberg. Bloomberg Brief. I'm Bonnie Quinn in New York. Tech stocks rallying and rallying big as earnings reflect some positive AI impacts. Intel's strong AI-fueled outlook sending shares up almost 30% pre-market. Matt Bloxham of Bloomberg Intelligence joins us. Matt, this is a massive move. Now, it mightn't hold into the open, right? But it's a signal of what investors are at least thinking. A massive turnaround. But is this a little bit of euphoria now at this point?
Well, I think it's certainly a big shift in sentiment and optimism about the kind of future. And, what we're seeing here is a better than expected revenue trend, both for the quarter they just printed and a really strong guide for the next quarter, which at the top end of their new range would be about a 14% upside to consensus. So it's pretty significant. I think what's really going on here is that as AI shifts from being about training models to actually deploying them into commercial situations and shifting to inferencing, the world is finding a need for Intel's core offering of the past, which is CPU, central processing units, the general processing power, and that's sitting alongside the kind of GPUs that people have been buying from NVIDIA. So, a bit of a kind of old school revival for for Intel in their core technology, and that's an encouraging sign for them. And obviously, alongside that, the CEO has been doing a lot to try to expand the company's capability as being a foundry, kind of helping other companies to kind of build chips. And whilst that's being a little bit slow to kind of follow the momentum in the core business, we're actually seeing signs of a pickup, notably Elon Musk signaling that he plans to work with Intel on his own chip project. So yeah, overall kind of pieces of the jigsaw for Intel coming together and some good momentum coming through.
Yeah, and writing its balance sheet as well. Matt, can I ask you a quick question about TSMC? Because we were talking about it yesterday in terms of it was complaining that ASML's gear was too expensive. Today we have Taiwan easing single stock caps for anyone who wants to buy into these single stocks. So money managers could now put 25% of a fund's net asset value into any stock. Is it going to have much of a difference to the likes of TSMC?
Yeah, I think potentially, obviously, it's very much a technical rather than a fundamental move, but TSMC is about 44% of the local index, and arguably there's quite a lot of pent-up fund manager demand in that local market that would want to own more of TSMC, but has historically been limited to just a 10% holding of their total net asset value. So I think you could see some fairly significant, I guess we're seeing that today, some significant portfolio rebalancing to kind of increase exposure to TSMC, because ultimately the fundamentals of TSMC is still very strong, still kind of very much at the heart of the AI trade that we're seeing still play out in a very good way across the world.
Can I ask you about the new DC models that rolled out, preview versions? It doesn't seem to be scaring the market quite so much as earlier ones, but tell us more.
Yeah, no, the spook factor's definitely kind of dissipated, hasn't it? But this V4 model, matching the likes of OpenAI, Gemini, Claude in terms of performance, but pitching it as significantly lower cost if you're going to use it. And I think that's going to become increasingly important as we go forward. As more companies deploy AI at scale, they're going to realize it can be quite expensive to run, and there's going to be pressure to either look for models that can deliver that productivity at a lower cost, or pressure on the likes of OpenAI and Anthropic to adjust their own models so that they require less processing power and therefore less cost.
All right, Matt Bloxham, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Meanwhile, in Europe, EU leaders in Cyprus for a two-day summit. On top of that agenda, how to deal with higher energy prices. Bloomberg's chief Europe correspondent, Oliver Crook, is in Nicosia with the latest. So, Ollie, we had lots of talk about energy, also the freeing up of this funding for Ukraine, which was a massive sticking block for a long time now. Tell us the output, the result.
Yeah, so we'll deal first with the Ukraine question, and it's really a fundamental question for the survival of the nation. We've heard it from Zelensky many times, that 90 billion euro loan coming from the European Union, blocked by Viktor Orban until this week, really was the lifeline for the Ukrainians. And Volodymyr Zelensky came here to Cyprus. He met with European leaders last night, and it's been, we have to say, a remarkable 2 weeks for Ukraine, really a reversal in the fates. You went from basically getting that 90 billion euro loan blocked, getting it unlocked. You get the 20th sanction package by the Europeans. That has been rolled out, and now negotiations on the 21st sanction package on the Russians. So this is all going in the way of Ukraine, and that is building on some of the momentum that Zelensky would like to capitalize on now to have a much more difficult conversation, but a very, very important discussion about joining the European Union. And the sort of reporting that we've done, the people that we've been speaking to on the ground here, but also earlier in the week in Brussels, is that European leaders, now with Viktor Orban out of the picture, it paves the path for a much more serious discussion about bringing the Ukrainians into the European Union. Now, as you know, anything with the European Union takes a very, very long time, particularly joining as a full member. But that is a conversation that is now accelerating in earnest, and something that the Ukrainians would like to see happen by next year. I think for anybody, that's an intensely optimistic timeline. That being said, it is the groundwork is now being laid, and that is a very serious discussion now among the European leaders.
And interestingly, it was a huge sticking point that Ukraine never accede to NATO, for example, when we were, right smack bang at the beginning of the war. But speaking of NATO, a lot of developments. So we have Donald Tusk telling the FT that the US wouldn't back NATO if Russia were to attack one of the NATO countries, and that could happen within months, which sounds terrifying. And then you have the US, of course, wanting to boot Spain out of NATO. Where does that organization stand at the moment, Ollie?
Yeah, I think, Zvani, that is the fundamental question. I think that, again, when we return to the main issues that the Europeans have had with the Trump administration, the trade war was obviously massive, but I think nothing is bigger than the question about American commitment to NATO and that Article 5 guarantee. It is basically the security guarantee and the security umbrella that has preserved Europe basically since the end of the Second World War. And now, every other week now, we have Donald Trump calling NATO a paper tiger. We now have reports from Reuters that there's an email circulating around the Pentagon that basically the United States would look at potentially booting out Spain from NATO because they haven't reached their 5% target and they haven't committed to that target. So all of these things put into jeopardy the real sort of the ironclad nature of NATO and Article 5, which is, of course, fundamental to sort of deterring Russia. That being said, there are then conversations also happening in tandem. They don't want to be too public about them, but there's another security defense clause within the European treaty. It's called Article 42.7, and there are lots more conversations happening at the European level of operationalizing that. Basically, it's a NATO ex the United States, a common defense clause within Europeans. Now, again, this is a very delicate conversation because you don't want to be talking openly about basically a replacement to NATO because that could undermine it, but a very active conversation and a very big concern for European leaders.
All right, we'll watch that. Ollie, thank you so much. That is Bloomberg's Chief Europe Correspondent, Oliver Crook. Coming up, we're going to get you set up for your Friday trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's take a look at what your market will look like going into this Friday session. So we have crude creeping ever higher now. Brent crude is above $107 a barrel, up more than 2%. And WTI close to $98 a barrel. For the moment, it is not affecting equities. The Nasdaq looks like it might be having another great day. Of course, Intel is up some crazy amount pre-market. We'll see if that holds. Breadth in the S&P 500, though, has been fairly narrow, so we haven't seen that many companies making 200-day moving average highs. We'll see if that changes today. Of course, we have seen some blow-away earnings in terms of semiconductor earnings in particular. The SOX index up 33% this month. The dollar index unchanged. Same for yields. Gold down just a little bit. Many of these markets just waiting to see what happens next in terms of US and Iran and whether there will be any kind of negotiations or any kind of response to the US proposal still. One stock, of course, we're keeping an eye on is Intel. Lip Bhutan will be very happy to see it up 28% pre-market. We'll see if that holds throughout the session. This is Bloomberg.